Hey, everybody, and welcome to another episode of Live Charting, the show where you pick the tickers, we chart them out for you. I'm your host, Jason Krutsky, and our guest this evening really requires no introduction. You guys know him. Y'all love him. He's TrendSpider's own Mr. Jake Wujastic. My buddy, Jake, how are you doing this evening, dude?
I'm doing well. Thanks for hosting me tonight.
Absolutely, man. It's always a pleasure to talk shop with you. We don't get to do it often enough. So I am not going to waste another second here. Like I said, everybody knows you. What are you thinking about the indices these days? How are we looking?
Yeah, I mean, I think we're getting to a pretty crucial level in the markets. For those that follow the anchored VWAP, and Brian Shannon, yeah, he's pretty much the evangelist of the anchored VWAP and who taught me about it. We're kind of getting back up to that level on a lot of the indices, and some individual names are even breaking through them, which to me tells me that we're probably going to break through them on the indices as well. And that's really kind of what I'm looking at. You've got your weekly candles also starting to look really good. Your monthly candles are closing tomorrow. Everything's looking relatively good. Doesn't mean that I think, this is a bottom, kind of like, when we were at all-time highs in January. A pullback, people weren't saying, oh, this is the end of the bull market. They were saying this is a pullback. And then as things progressed, then people started to, make further predictions as price action evolved. So for now, it still looks like a bear market rally. And there's a lot of things, that are not incredibly bullish if you're looking at it just based on like a macro perspective. But at the same time, I think the market is just pricing in a recession. And I think as that happens, the market's going to price in the Fed probably not raising rates as quickly in the future. But at the same time, we do have pretty much out of control inflation, right? So you do have the issue of stagflation. So that means that the economy is going down and prices are going up. So that's kind of the worst case scenario. Recession sucks, but stagflation is really bad. So I think, the Fed has its work cut out for it to kind of figure out how do we kind of get around this. I think they don't mind putting the economy into recession. I think the economy, you've got to cool down the economy. It's been so overheated, but at the same time, you also don't want to just stop raising rates to cool off, to stop the economy from growing, because then inflation's probably going to continue up. So it's a very weird area that we're at in the market, and historically in the market. So we haven't really seen this since the early 80s. So from a technical perspective, we do have some areas we want to get through. I have the SPY chart open right now. SPY is right at that swing high VWAP, the swing high being the March 29th high. If you look at a lot of different charts, the March 29th high is your swing high on a lot of these. Tesla, for example, is a little different. I think April 4th was your swing high pivot there. But all in all, we are kind of moving up right to this area, which, if you follow just the, make these red, if you follow the circles on my screen, this has been an area where prices pulled back. Apple did have a pretty big move to the upside after hours, but I think we did get a little bit of a pullback. At least the SPY pulled back a little bit from where it was at one point. So all in all, this is a really kind of crucial status quo point in the market, where the status quo has simply been price rejects at this swing high VWAP zone. And if we do get above that, that's when things definitely get interesting. And we are seeing that in some of the names, the bigger names such as Microsoft and Apple. And so that makes me think that maybe we are kind of in for more upside.
Yeah, so let's talk about that a little bit. What is do you have a kind of a line in the sand that suggests like a price level that suggests maybe this is the bottom and maybe we need to start thinking about this as the bottom as opposed to a bear market rally? What would you need to see in order to get you kind of in that mindset?
I really don't use moving averages a lot for like support and resistance, but I do use them for just overall trend. So for example, when I'm looking at resistance above, I'm not looking at a moving average. I'm looking at a VWAP, or, using the volume by price, looking at overhead supply. But it is important to use moving averages essentially as a as a direction for trend. So the fact that we are starting to finally kind of curl up here on the 20-day moving average, that's something to consider. But we also did that here back in June, and then we continued down. So all in all, I think the fact that the 50-day is starting to flatten out a little bit and possibly starting to move up, that kind of makes me think that this, longer term, medium term trend is maybe starting to flip here. So it's not necessarily a price level. It's more or less looking at these moving averages in the direction that they're going, rather than just saying, hey, if we get above 420, bullish. The 200-day is definitely still declining. You would really need price to break above that to, for it to actually turn back up. But at the same time, the 200-day, the 200-day is definitely kind of more of a very generic moving average to use. Not saying it's not like a great moving average to use. Everyone uses it, so it kind of becomes a self-fulfilling prophecy. But it's not incredibly like, you can see price moved around it a lot back here in early 2022. So, the price was dropping as the moving average was still increasing. The moving average was still increasing as we were in this bear market rally back in March. So doesn't, I'm more looking at kind of just the overall 50-day. And if it can hold a decent move to the upside over a couple weeks, right? So we did have a little bit of a move up here. Notice how long it took for the 50-day to actually start moving up after this move, right? It was very delayed. So, I think we're going to have to definitely get a sustained move higher for the 50-day to actually really make some type of meaningful flip to the upside. But I would be looking at the moving averages over really anything else, as far as like, maybe the trend is starting to change. You can always go to the higher the higher time frames as well. So this is the weekly. If you turn on the 20-week moving average, the 50-week moving average, these are also still declining. You can see though the 20-week is starting to flatten out a little bit. The 50, is just slowly kind of declining still. So there's still a lot of things that we need to break. You can see here actually the 20-week moving average actually has been a pretty important level of support and resistance. So, I'm not like against using moving averages as resistance and support, but I want to be able to use a moving average that has proven that it has made the market, right? So what do I mean by that? Here, October of 2021, this acted as a pretty solid support level, give or take, a couple % margin of error. Over here, support, finally broke down, resistance. And so now we're getting back to this area. So the 20-week moving average is actually a pretty important moving average to keep an eye on if we do break to the upside. I would say, you'd want to see multiple weeks above this for this to possibly be meaningful, but I think it's all about the moving averages and the direction, and if they're increasing or decreasing.
Got it. Cool. Well, thank you for that. If you're just tuning in, we are here with Jake Wojastic. Thank you so much for being here. We're going to get to your requests here in just a moment. For everybody who is familiar with the show, you guys know how it works. But if you're new to the show, you're going to get to vote every single round. Every single time we do a ticker, you can vote again. You can vote for 3 symbols per round. You do have to vote for unique symbols. So 3 unique symbols, but you can vote for the same symbols every round. So if we don't get to your symbol in a couple of rounds, just keep on voting and we're going to get there as fast as we can. And last thing, before we get going here, we've got a 35% discount for anybody watching tonight who is not yet a member on TrendSpider, a user of TrendSpider. So if you are interested in the platform, interested in giving it a go, we've got a 35% discount that is available just for while this show's going on. Sadie will hook you up with it in the chat. We're going to get back to the charts with Jake, and we are going to start on the first request, which is Tesla.
All right. Well, already kind of have the chart set up for that one. All right. So, Tesla clearly a leader here, and I'll kind of explain why. So if you remember, we were looking at the S&P 500, and I'll just go back to SPY real quick just to kind of explain how I look at leaders versus laggards. And I mentioned this in the weekend video last weekend. And really the way that I look at a leader versus a laggard, what's leading the market, what's, delayed or kind of maybe just moving with the market. You need to find a constant on the chart. Whether that constant is a moving average, whether it's a VWAP, whether it's something that every chart has, right? So in this case, the swing high VWAP, the March 29th pivot, pretty much here, which is your swing high before we continue down and hit new lows. That's what I'm using, right? So look at here, the S&P 500, the SPY ETF, it's right at this VWAP zone. So I would say, the S&P 500 is kind of your baseline. Now, if you go to Tesla is actually breaking above this area. So Tesla is clearly a leader, and it generally is a leader in the market. So you can see here what I've done is I've taken the swing high VWAP, and you can see here that your VWAP is actually a little lower. So you can see that price kind of moved around it. So you've got this area here that the price didn't respect the VWAP. You've got it here that the price kind of bounced and retested the VWAP. In these instances, I actually will take this candle and see, okay, what percent offset above the VWAP do I have to get to include this candle's range? Because then I know if we break above that offset, then it's kind of a change in the status quo. I like to use the term status quo. So in this case, you can see I used about a 5% offset here. You can see now this blue area is capturing this candle. So now anytime the price gets above this blue area, that's important to me. So here back during earnings, we kind of gapped above it and actually closed within it. And now you can see that we've actually closed above it. So this is definitely what I think the rest of the market is going to do. I think a lot of the names are going to follow this same thing where your swing high VWAP zone is going to break to the upside. So Tesla looks incredibly strong here. It always has been kind of a market leader, so there's no shock there. It's just, how do I know that it's a market leader? Just anchor your VWAP from the swing high. As I mentioned here, that Tesla is has a mind of its own here. So your swing high for Tesla is actually April 5th, whereas a lot of the other indices and names, the swing high was actually on March 29th. So anywhere from that March 29th to around April 5th or 6th, that swing high, that pivot is where you want to anchor the VWAP and see, okay, is the price below it still, or is it above it? And that's how you'll be able to gauge if it's a leader or a laggard. So yeah, Tesla looks really good. Really nice candle here. Going into the weekend, the weekly candle also looks really good. So if I just take away the VWAP here, and I want to measure kind of the volume profile of all the market actions since the COVID low, you'll see that there's quite a bit of volume here. So if you guys follow me, I like to use the term volume shelf. It was kind of just something I came up with because it's volume and it looks like a shelf, and that's kind of where the name comes from. So we bounced off this area, and it's sometimes kind of obvious, right? The longer that price is trading within a range, the more volume that's going to show up. It's just essentially aggregated volume. So not shocking that we do have a lot of volume here, but the volume shelf is just showing that you do have a lot of shares pretty much from around 660 all the way up to around 720 that are essentially at break even. So as supply dried up, these shares kind of act as almost like a launch pad for price. And that's what we've seen over the last couple weeks. So all in all, really nice. On the monthly chart, that's kind of when things get a little interesting. You did have this kind of this ascending triangle start to break down a couple months ago. So naturally, this is definitely going to be an area to get above. So this zone here. Kind of one thing as well, so anytime you're using diagonals, I know a lot of people don't like to use diagonal line zones, to each their own. But I do like to use them. I think they make the market a lot of the time. It depends on how quickly price gets to that area, to the upside or the downside for that price target, right? So if in August we move straight up, let's say with this candle here, then we could get up to around, let's call it, the 950s before we hit this area. Now let's say that price action does something like this, kind of goes like this. and then we do a little
Goes
loopy loop
backwards.
there. And then we, and then we hit it up here. Then all of a sudden your price level that you need to kind of get above is way up here around 1100. So these diagonal lines are a function of time. They're not static, right? So what I mean by static is if we highlight a horizontal level, it's static. It's not changing. It as time goes, it doesn't change. The slope is zero. But when you have something that does have a slope, it's changing as price changes. And so if we were to move up to this area next month, then I'd say 950 to 1,000 is going to be your resistance above, and that's simply just support, previous support acting as potential resistance. So we do still have a ways to go before this can really that we can say that this breakdown is actually invalidated.
So real quick before we move on to the next name, because I know it's going to come up later, you talked about the 5% offset for your anchored VWAP from March. That's not going to be the case for every single name that you look at. Do you, because different names are going to react differently. So is that so you just adjust it based off of whatever kind of candle is along the path that kind of breaks out from the main VWAP?
Yep. Yeah, exactly. So here on the S&P 500, we've got this VWAP. The blue lines are VWAP. And notice here, you've got wicks and bodies that are actually above this VWAP. So I want to capture that price action and add an offset that includes this area. Same thing to the downside, right? There's multiple times here where the price didn't get all the way to the VWAP, but it got close. So I want to actually capture that to the downside as well. So I've already kind of toyed with a little bit. So it's about negative 0.5% and a negative 0.5%. So a 0.5% offset below, and then a 0.5% above. So when I do that, you then have this zone that you create. You can actually, you could probably bring it down a little more. I generally like to keep the zone on the upside and the downside the same, just to kind of keep it even. But you could even lower this zone probably to negative 0.75 to capture this price action here. And then you'd have something like this. And so then you can see, we tested that area now. So we've got, so whenever you're drawing trend lines, whenever you're using moving averages as resistance or support, which as I mentioned, I don't use a lot, but I think the 20-week was a good example. I need to see price action respecting that. If I just see, price action, testing something one time, it doesn't mean anything to me. I want to see something like this, where we have literally multiple instances where price is respecting this area, and then it becomes a lot more relevant to me. So in this case, we're using essentially the same VWAP from this swing high. It's just give or take 4 or 5 days from the Tesla swing high. But notice that we used a 5% offset in Tesla, and here we're using a 0.5% offset to the upside for SPY. So yeah, each stock and its personality is going to change the zones and how wide those zones are based on the price action.
Got it. Okay, cool. Let's keep on moving. The next round is NVDA.
Okay, so NVIDIA, great example. We are kind of almost lagging the overall move here. Why do I say that? Well, we've got the swing high VWAP here. You can see here that we are still below it. We're not above it like Tesla. So we are kind of right in line with what the S&P 500 is doing as far as relatively speaking when you compare it to the swing high VWAP from there. So this is clearly an area that's important to get above. We saw it back on July 21st. We tried to get above it. We couldn't get above it, pulled back. And if I were to guess, where did we pull back to? This pivot low VWAP. Bounced right at it. And then we continued to move up. And we retested that zone again today. Maybe like 20 cents or something below the previous high on the 21st. So same thing here. We need to get above this area, and that area is anywhere from around 181 all the way up to around 185. So I would like to see a close above 186 in order for the status quo to change. What is the status quo? Well, the status quo is price has been below this swing high VWAP zone for the past 3 or 4 months or more. So once we get above that, then all of a sudden the status quo has changed. Your VWAP is actually going to start to increase. It's not going to be flat anymore. As price action is trading above that, that volume is at a higher price than your average price, your higher than your volume weighted average price here, and that will actually cause the VWAP to start moving up, and that's generally a sign that we're kind of starting to reverse.
Got it.
So that's your daily. Your weekly, what did I have here? Oh, your weekly is really, I don't have a ton on the weekly other than, I mean, your upside on the weekly is the same as the daily. It's this VWAP from your swing high here. And then the downside is just your 2019 low VWAP. And some people may say, well, that's a really random, VWAP. Well, it's a pivot low. Your big low was back in 2018, but your 2019 low is kind of your secondary low here before the next leg up. And notice here, same thing. 1, 2, and 3. So this is an important VWAP to watch. Price action has respected it, not perfectly. You're rarely going to see price action respect something perfectly, kind of like that SPY chart where it's perfectly respecting that VWAP zone. It doesn't always happen like that. And when you have this big of a wick, I'm not necessarily going to come in and throw like a negative 10% offset on that VWAP. It's just a little much, especially considering COVID is what caused that big wick. So, this is an example, right? I kind of did negative 10%, just eyeballing it. You could probably even make it negative 12%. And all I'm trying to do is capture this wick and keep it in this blue area. And that's kind of where that offset comes from. So it's really just kind of toying with it. It's not, it's not an exact science. You just kind of eyeball it. And then from there, you kind of create your zones that way. So all in all, we're kind of pinching here, meaning that the price is starting to trade within the 2019 low VWAP as well as the March 28th week of March 28th VWAP. And so, kind of like Bollinger Bands, as the price kind of trades within this area, it shows that price is starting to kind of flatten out. And then a lot of the time you will have a price finally make a move one way or the other. And then generally price will follow that direction. So if we break to the upside, we're likely going to continue up, maybe even retest that VWAP zone and then continue up. So maybe something like, break to the upside, retest it, and then continue up. That's pretty common across most technical setups. You're always going to retest where you broke out of a lot of the time. At least that's what I like to see for kind of a healthy pullback and then continuation. But for now, we are trading in a pretty tight VWAP pinch right now, which is coined by Brian Shannon. That's not something I came up with. That's just what I was taught by Brian.
Right on. Awesome. Let's keep moving. Coin, COIN.
Coinbase. Another one that Kathy sold at the wrong time.
Yeah, she sold yesterday, right? Or day
they
before
said like
yesterday.
The all-time low at 53, but I don't think 53 was the all-time low. So
she unloaded a bunch of shares this week.
Yeah, quite a few. And I saw the chat. If my chart's too bright, you can always lower your screen brightness too. You don't have to have it at like full brightness because I know this can get a little bright. But yeah, the white screen is just what I'm used to. Dark screen kind of gives me a headache. So Coinbase on the daily, kind of if you anchor the volume by price from this November 9th high, pretty much your, not your all-time high, but pretty close to it. You have a lot of volume down here, and naturally you're going to have that. You've had a lot of price action here, so that's why you've got a big volume shelf here. So you do have volume supporting price here. You have a gap above. So your gap above closes around 66.20 or so. So if we continue to kind of break after that, then maybe something that's worth watching. But this thing's just it's just stuck in just such a range until you really break the 83 area here. So I'll just make some levels, here. And this is just very basic stuff. You're just highlighting pivots essentially. We're stuck in a pretty decent range. So until we break out of that range, you're kind of just, if you're intraday trading, whatever, but if you're trying to go long or short within this range, you're kind of taking just a gamble because there's no direction, there's no trend. If you pull up the 20-day moving average, you can see it's starting to curl up a little bit. The 50-day, I guess you do have a 50-day moving average now. We've had enough data points. And you can see that this is starting to flatten out. So, at least it's not declining at this point. So if that starts to kind of increase, a lot of people use like the slope or just the direction of a moving average. So some people may, have a moving average scan that's like, all right, what stocks started to increase on the 50-day moving average this week? And if that pops up on people's scans, then all of a sudden Coinbase becomes, a potential stock to trade. And that's kind of essentially how the market is made. People start coming in because their technical criteria are there now. So we're pretty much flat, and we've been flat for the last 7-8 days. But if price starts to move up above this, you could definitely anticipate this starting to start curling up. And then on top of that, if you look at, you can always use moving average crosses as well. A lot of the time they can be a little laggy. So for example, here, the 20-day crossed up through the 50-day here. So if you would have taken that trade based on that cross, you would have definitely been late to the move up. But if you would have taken it here, you still would have had 23% to the upside before this flattened out. Now, look what happened here. Moving average crossed to the downside, and we've pretty much not crossed since. So if the 20-day crosses the 50-day to the upside, that's something that we haven't seen in quite some time. And that could also be something that, people are watching for as well.
Right.
Then nice. On the weekly, there's just not a lot of data points since it's relatively newer stock on the market. But if you want to get creative, you could probably draw some kind of weird wedge type thing here. But for now, you're just essentially trading in a range.
Got it. Yeah. So you're really looking over those recent highs before really thinking about getting into anything longer term.
Yep, exactly.
Got it. All right, let's keep it on here. Mara, MARA, is the next round. Haven't looked at this in a minute, but I'm sure it's doing all right past couple of days.
Yeah, I mean, it's still doing pretty well considering the COVID lows in March 2020. So that's another thing that I've kind of used as a constant. If you look at Roku or you look at PayPal, those stocks are almost trading where they were during the COVID lows. Mara is still trading up, 3,600%. So, relatively speaking, it got destroyed. But then if you compare it to where we were back in 2020, it's actually still doing pretty well. So yeah, that's definitely something to consider on the Mara side. And, if you just use a basic kind of trend zone here, we're kind of trading right at this area. And the reason why I'm making it a zone, if we just use a line, we're connecting 2 points. If we use a zone, all of a sudden we add 1, 2, 3 points, 4 points. And it becomes a lot stronger of an area. So for now, it's pretty much just kind of a channel at this point. So connect this point to this point, you almost got a perfect channel. So we're kind of just trading within that area, nearing resistance. But crypto's looking pretty decent. So yeah, this is essentially just a proxy for crypto if you want to trade it as a stock. So if Bitcoin continues up, this is likely going to continue up as well.
Right. All right, let's keep on moving then. AMD next round.
AMD. Yes. So AMD, let's go to the daily here. So AMD is actually a cool one. This was a pretty cool case study using the 10-period RSI on the daily. So, you can use RSI and sometimes it will just be completely worthless. If you're in like a prolonged downtrend, you can definitely, have trouble buying too early because, the RSI, the percent range, any other oscillator can remain oversold pretty long. Here's an example where you essentially, this is a tough one. You can't really do this one. It's kind of the start, right? So like what I'm looking for is I'm looking for when price tests the bottom of the channel and the RSI is below the 30 threshold. That is kind of like, I don't want to call it a buy signal, but it's an oversold signal and kind of a signal that continued to pop up. So it first happened in January, it then bottomed out here in April. And what do you see here? You see once again the RSI below 30. And then the last time we had it was down here. We undercut this channel support zone by, I don't know, like $1 or $2. And what do you know? The RSI was below 30 again. So you can really use price action testing channels and the RSI having the same reading as a signal. So this did have a pretty big move to the upside. We've got this gap above, so this gap is definitely something to keep in mind. If we were to use that swing high VWAP from March 30th in this case, you can see that we're right at it. So a lot of these names are pretty much trading right at that March high VWAP. And yeah, I mean, your gap above fills right around 94.20, 94.25. And, I'm thinking that we'll probably get to this area here. Could be completely off, but it's interesting seeing where the gap in this downward sloping diagonal zone intersect is probably around mid-August. But, we'll just have to see what happens. But your gap around 94.20 is the main area you want to get above. At the same time, gaps do act as resistance, at least in the short term. So I wouldn't be shocked to see a pullback if we fill that. But overall, the target is a retest of this resistance. And same thing, right? It's a function of time. If we went straight up tomorrow, then the top of that channel is around 104. If we trade something like this, maybe break above it and then come down and kind of do something like that, then all of a sudden your resistance is now around 100. So it is a function of time. It changes as time goes by. If it's a decreasing slope, then as time goes by, your levels are going to decrease. If it's an increasing slope, as time goes by, your support's going to get higher. So
right.
100 to around 104 would be your channel resistance to watch the next month or so.
Got it. Cool. Next round, MSTR.
All right, back to the old
Bitcoin.
Crypto proxies. Yeah, I mean, all of these names, MSTR, Mara, they're really just proxies to crypto. So like if we went to go look at a lot of these names, they're going to be pretty similar, and they're all obviously going to have different price levels and levels to watch, but all in all, same thing, right? We're kind of nearing this resistance zone, kind of what we saw in Mara. Your just diagonal resistance zone here is anywhere from around 308 to around 315. That's assuming, let's say, from here to here in the next 2 weeks, then your resistance zone would be from 310 to around 320. If this takes a while and moves around, and let's say we hit it here, then all of a sudden your resistance is around 300. So it just depends on how quickly price moves up. But I would definitely say that's a main resistance area. Same thing here. If you want to use the swing high VWAP from this area here, this is clearly leading a lot of the market. Kind of looks very similar to Tesla, where you had your swing high VWAP from March 29th. You had nice resistance here. You had nice resistance here. And like Bitcoin, MSTR trades pretty technically. So not shocking to see a break to the upside and then a perfect retest of this VWAP zone and then continued up. So, all in all, you don't really have any gaps to watch. Let me turn on the gap detector to see if there's any gaps that I'm missing. There's only a gap to the downside. There's no real big gaps to the upside. So, you can't really use gaps as a target above, but if you did take the VWAP from this point here, that would be around 340 to 345. And you can see that this is a relevant VWAP because price respected it almost perfectly when we did hit that swing high VWAP. And that's essentially what created that swing high VWAP in late March.
Right. Awesome, man. Well, if you guys are just joining us, we are here with Jake Wujastic. He is taking your chart requests. If we have anybody who is not a TrendSpider user tuning in this evening, we've got a 35% discount code available for you. It's only available for the next 25 minutes, just while we're here on the show. So if you're interested in that, there you go. We've got the link for you. So we're going to keep on moving here. GLD is the next round.
GLD. Yeah, I haven't looked at gold in a while. Yeah, gold is one I just completely stay away from. There's too many macro kind of things that move gold, and obviously gold trades around the world, so that's why you have such a gappy chart here, because it's essentially just gapping from what happened while the market was closed. So yeah, decent move up over the last week or so. What was it, up about 1% today? But I mean, geez, from the highs, it's still down, 15%, which is a lot for gold. So this is another one where it's kind of like a no touch. There's just not a lot of, there's no trend. You've pretty much just traded within this range. And if you like to, play ranges, then, maybe this is a good one for you. I mean, look at the last time the price tested this horizontal level, you had a huge move to the upside. So, if we were to just take this move and measure it, and then just, copy and paste it and apply it here, then, that would be a pretty solid move. And you actually have a gap almost right where that arrow is. So, you do have a gap up here. And it's actually a weekly gap, which you don't have a lot of. So 178 to around just call it 178 to 180 is your gap above if we did kind of get some momentum here.
What would you want to see, I guess, to get you? I mean, you're saying it's not tradable, right? It's just because it's in a range. Where would you find a trade in this? Like, what would you do? What would you need to see in order to maybe get you long or short biased?
I mean, some type of trend. If you turn on the 50, you turn on the 20. I mean, look, whenever you have moving averages that look like this, it's dead.
Kind of going sideways.
Like a lot of strategies, really successful strategies, are simply based on trends. So if you're not trading the trend, you can trade the range, but there's just not really defined levels here. I guess you could highlight this area as kind of your potential resistance to the upside, but gold is just something I just won't touch. I don't follow it enough. There's just a lot of variables that come into play. You go to bed, you realize something happened in China last night that's affecting gold, and you wake up and it's like, oh, this is down 2%, So there would be nothing for me that would really trigger a buy signal or a sell signal. I just wouldn't trade it. But it is
right.
It's not even a great proxy, to be honest. Bitcoin is a much better proxy for market risk and risk on, risk off than gold or silver or anything.
Yeah. And I think it's really important to know what you're not willing to trade. Simply, there's so many things out there that you could trade. Why would you bother trading something that you don't feel comfortable trading if you can trade something that you do feel comfortable trading, that you do know, that you do understand the world of, right?
Yeah, I mean, I like to use the casino example a lot. Why, if you play blackjack and you played it for 20 years, why get bored one night and go play, Baccarat?
Yeah, right.
Or crap, or some random game you don't even know how to play. You have no edge. So
Right.
Knowing the personality of the stock or whatever asset that you're trading is definitely gives you an edge.
For sure. All right, let's keep on moving. Next round is Apple. Big earnings from Apple this evening.
Yep. Yeah, Apple's another one that's clearly leading the market. Same thing. You apply your swing high VWAP and just right clicking, and just so for those that have TrendSpider don't know how to do this, right click, create alpha trends anchored VWAP here. it automatically creates the VWAP from that point. So this is another one. Beautiful SR flip on this. SR flip is just when either support or resistance flips to the opposite. So in this case, 1, 2, 3 times where we had pretty hard resistance, and then finally broke above and kind of tested this previous support, now acting as resistance level, pulled back, bounced right at the swing high VWAP, and now we're breaking above that area. So as a function of the swing high VWAP, this is leading the market. It's higher than the swing high. Remember, SPY, the Qs, they're all right at this area. So Apple's definitely leading the market here for sure. And then I don't know exactly what the price is after hours. What is it? 162.
It's like 162.
So we're way up here at this point. So we're way above this area, and yeah, a pretty strong chart here as well. Weekly looks really strong too. Pretty much broke above, some pretty key levels that you wanted to see break. So very simple horizontal support back in February and then back in March. And then we broke down through it, retested as resistance, continued to hit a new low. And now we're breaking above that area over the last 2 weeks. So pretty strong chart. Apple does like to kind of do these linear moves, right? You're just kind of like just continuing to move right up. Not even like a stair step, just like a straight line up. So looking pretty strong here, and clearly leading the market.
Yep. All right, let's keep moving. SCHL.
Scholastic.
Never heard of this. Scholastic, maybe they make books.
Yeah, I think this was like the people that used to like spam my parents when I was like in 7th grade trying to make me buy more books.
You're reading enough, Jake.
Yeah.
Or maybe you're reading too much.
That definitely was not the case. Yeah, I mean, you've got a big move to the upside. Pretty clear level that you want to break here. It's just these previous highs here. VWAP isn't going to do anything for you, because the VWAP is just way below.
Right.
VWAP from that high, VWAP from this high, you're just below, or you're way above all of them. So that's not going to do anything. And this is the monthly, right? I mean, look at this. This is over the last 30 years. This thing has not done.
It's the most boring stock in the market.
It looks like a damn seismograph. It doesn't. Yeah, there's not a lot going on here. You just got a lot of chop. If we do break, I'm just gonna create a zone from this high and then connect it to this low, this lower wick here. I mean, until you break above, let's call it like 57, you're kind of just back to where you were back in 2018 and then back in 2002. So I'm assuming, or let's see, do they pay a dividend or anything here? I would hope so, because if not, that would be yeah, they pay a dividend. So at least you're getting some type of dividend out of it.
Right.
And so, that's why some of these stocks can trade and go nowhere for 20 years, but you still come out on top if you're just collecting divvies. So yeah, this makes sense that this is a dividend stock. But I mean, if you want to get creative and use the diagonal lines, I mean, technically you are kind of breaking out here. And there's enough data points, at least for me, that this is kind of relevant. I could even go back here, capture kind of this descending area, and we are breaking out. So, that's something to keep in mind too. Shorter term, I'd say medium term, which is 1 to 2 years, depending on what time frame. Short term in like a day trading environment is 5 minutes, where short term in like more of a swing trading or a position trading environment can be months to even a year. So in that case, in the medium term, we are starting to break some pretty crucial levels here. I'm assuming earnings just happened, but yeah, actually looks relatively decent. But it's I just can't imagine this being incredibly liquid stock. I just don't see a lot of people trading plastic. But yeah, for an investing standpoint, yeah, it's breaking out.
It's like watching grass grow is what this looks like to me. Let me ask you this. We've got a kind of a question about fibs. This isn't specific to the question, but you're getting into almost maybe an all-time high scenario, right? Like we're a couple bucks away from an all-time high here. Maybe, well, I guess not a couple bucks, maybe like $10 away. If this thing hits an all-time high, we break out of this, super long sideways move. Yeah, I was going to ask, how do you go about figuring where to set your targets?
Yeah, I would use, your most extreme move. So here's your all-time high back in 2002. Here's your low back in 2009. So this is the 2 points I'm connecting the measured move essentially of the fib. And then if we did break that high, then yeah, your 1.618 extension is up here around 86.20 or so. We still have to move up quite a bit, probably 20+% to even get to that all-time high. So you don't need to use. I personally don't use fibs unless there's no pivots to look at, because a lot of people will do kind of they'll take a fib of something like this, and let's just throw some of these on, and whatever other main ones you have inside the 0 and the 1. But I would prefer to just use the pivots from the previous move. I don't need to use fibs. I mean, and there's nothing wrong with doing it. Just from my perspective, I'd rather use like areas where price has memory versus like fibs. How many there's a lot more people trading on horizontal levels than there are fibs, at least fibs that are inside a measured move. Now once you start breaking the new all-time highs, then yeah, the 1.618 extension of the move is definitely what a lot of people are watching, because you don't have anywhere else to look. If you look left, there are no pivots to say, okay, this is the next area to look at. Once we get past this area here, there is nowhere to go. There is no frame of reference to look at the next level. You have to use fibs.
Right.
And that's kind of where the 1.618 comes handy. And honestly, I used to think fibs were really just voodoo until JC Peretz. I kind of started. So I saw a couple of his presentations, and I'm like, oh, maybe I should throw these on the chart. And some people would be like, oh, the price is at this 0.786 extension. Well, yeah, but it's also just at this previous level that's been resistance like multiple times. So yeah, it's a little bit of a coincidence. So that's the way I look at it. I don't look at it as, oh, it's hitting the 78.6% fib. I'm looking at it as it's hitting previous highs. I'd rather look at where price has memory than fibs if I'm in the move.
Right. Got it. Okay, cool. Meta.
Yeah.
Looks fantastic.
This one's looking a little rough. Yeah. Meta's kind of broken here. Which, I don't mind, because I think Mark Zuckerberg's a freak. But you got this long-term resistance zone, or support zone that started back in 2016. You had multiple instances. Here's your secondary line. Or here's your secondary data point. You extend it. We got one here. We got another one here. This is a very, very relevant line or zone. And so, the fact that we're still trading below it, some may argue that it's almost like in a little bit of a flag here. So, it's not going to be a perfect flag, but still kind of in a flag for now. And it's just trading in a very, very tight range. So, for me, just kind of a no-go. I mean, if it broke these previous lows around 154, then I think it's a clear, shorting opportunity. But until then, you're just kind of guessing on the range.
Right. Okay. And then above, you would just, for a long opportunity, you just need to see it outside of that range to the upside.
I'd like to, I mean,
up and over.
You've got this huge wick here at like 180, whatever. So yeah, you definitely have to, I'd like to see it above like 185 to even get interesting.
Yep.
And then on the daily, never really seen a ton of these, but it's almost like a broadening bear. A flag, when a flag is where you have two parallel lines. So this is like a broadening flag, if you want to call it that. And technically, we did hold above this this zone. So if we let's try to get a little creative here.
I mean, it looks to me like they maybe just trapped a ton of shorts.
Yeah. And I
Right?
mean, the way the market's trading, it seems kind of crazy that this would be down, but I know their earnings weren't great. But this is kind of where I'd probably go in and maybe like change your percent range to a 5. So the 5 is essentially looking at 1 week kind of length of 5 days and is 1 trading week. So I'm essentially looking at the weekly Williams percent range. So you can see here, kind of interesting, same approach that I had with AMD. So you highlight every time price is tested this zone. And then you kind of you kind of mix and match that here. And it's not going to be perfect, but notice a lot of the time when we tested the zone, the percent range became oversold as well. And notice here that now this Williams percent range is a function of the close. So technically we, closed higher than this point here. So this was July 26th was your lowest close in this little group of candles. So, the fact that we did close a little higher here for this candle today and your Williams percent range is still higher than this low is worth noting, and we're at that support zone. So I don't know, I could see Meta kind of breaking to the upside. It's not something that I would be too interested in. There's just a lot of kind of variables at play here, but it's one that has not really reaped the rewards of a strong, at least the last couple of weeks market. So it's holding where it needs to. Even though it broke down intraday, it did hold above that area, and so it may be decent here. But on the weekly chart, it's horrible. Monthly chart trend is broken. Right. So it just depends on what time frame you're trading, right? Like if you're just trading for an opening range breakout tomorrow, then it could be a great trade. But if you're like a long-term investor looking for an entry, I don't think there's anything showing anything yet.
Right. Yeah. Now is not the time. All right. Let's keep on moving. Neo. You've been talking about Neo.
Neo. Yes, I have. Yeah, old Neo, man. This thing has just been kind of dead in the water, but finally looking good. Kind of going back to the tactics I used in Tesla, right? So if we look at the swing low, that's where I'm starting your VWAP at. And notice here that there's times where the price broke below it. It's still corrected back to the upside and hit new highs since this low in May, but you did have times where the price broke below it. So I want to capture these candles. So then I'm capturing that margin of error around the VWAP when it does break. So, if we go to the offset here, it's under bands, right? So it says percentage. It actually doesn't say offset, so that may throw some people off. It's under bands, and then you go to percentage bands, and then the level 1, 2, 3, 4 are just different, offsets that you can make. I have a negative 5% offset simply because I, experimented with, what these areas were, and they were about 5%. So now we've got our VWAP zone that needs to hold. It's holding. You've got price really starting to kind of coil here, kind of into, at this point, I don't think I'd call it a flag, because generally you want a flag to be like 15 candles or less, or a pennant. This is a little more than that. So I'd even call it almost just a falling wedge at this point. And so I still think Neo is going to be a huge mover. Now, keep in mind, they do have earnings coming up. They have earnings coming up in 2 weeks. So, there could be a bounce into just speculation into earnings and maybe just a strong market. I do think you're going to at least retest like $23, which is just your previous high here, on a pretty big move. This thing, when it does move, it can move really, really strong. So I'd keep this one on watch for a potential breakout, coming relatively soon. Weekly setup looks like crap. You can see here, I've kind of got this symmetrical triangle type thing breaking down. However, your swing low VWAP here is holding, and you've got a decent weekly candle forming into Friday. So yeah, I think NEO looks pretty good.
When it comes to a name like this, are you ever referencing or cross-referencing what's going on with something like FXI or BABA, one of the like biggest Chinese, either an ETF or one of the big China names, to kind of give you a little bit of extra, confidence in the idea? Or are you kind of just, this is a standalone idea for you, you don't need to look at that other stuff?
Yeah, kind of a standalone idea. I mean, I'm actually curious now what BABA does look like, but I would almost reference it more with like Tesla or something.
Okay.
But even though, BABA does kind of look relatively similar, you've got your same swing low here. The only difference is, notice that NEO is above your swing low VWAP here and BABA is way down here. So NEO definitely doesn't trade exactly with the Chinese names. I definitely understand why, there'd be a thesis around following the Chinese names when looking at this, but I'm actually looking more at like Tesla and that type of thing, which is what I think it's going to move more with, even though, Tesla had good earnings, it didn't move with it, but I think this is pretty close.
Okay, cool. Yeah. Next round is LAZR.
Oh man, this thing. Shoo. Ow. Yeah, definitely a SPAC. SPACs in general kind of are a little interesting if they're below the SPAC price of $10. So yeah, this one, I mean, the market is a kind of the rising tide lifts all ships type of model. I think if the market keeps going up, this is probably going to keep going up. I guess you could call this a little bit of a base. Just turning on the gap detector, you do have, I'm gonna have to make this a smaller gap. Let's make it like 0.2. You do have a gap above around what starts around $8 and then fills around 8.30. So, there is a target to at least look at for upside. If you wanted to kind of look at the swing high VWAP, this is clearly lagging. So this is a great example, right? We have the swing high VWAP. We've been using the swing high VWAP on all the charts. And notice a lot of the names are at this VWAP where this is still way below it. So, this could be a laggard play, right? Maybe this needs to catch up with the market and get to its swing high VWAP, which would be in the 9s. So as much as I don't really love this name just because it's just gotten rocked, if you do like to take a little bit of a chance and bottom feed, you do have the 20-day moving average starting to curl up a little bit. The 50-day is definitely still declining. But all in all, you may have a little hope here. I don't know what the weekly candle looks like. Not a bad weekly candle, to be honest. So as much as I wouldn't participate in it, I could understand the thesis here and almost like playing this as a laggard type play.
Right. Interesting. All right. Keep on moving. MRTN.
MRTN.
Whoa.
Right.
What a move.
What a move. 7% today. Yeah, and this looks really good. I don't know what this is, but I mean,
they're transport,
all-time
like
highs.
a trucking company.
Okay, and this is a great example of the fibs, right? So the way I would look at this is you've got an ascending triangle here. And you could even make it kind of like there. You've got your resistance zone here, give or take, a few bucks. So you've got a clear ascending triangle here. You're breaking to new highs. Look back to the left. There's no data points. There's no pivots. So you don't really have anything to go off of. So this is when I would use fibs. Take the high, take the low, and get rid of all these inside fibs because we're not going to need them. And then, yeah, your 1.618 extension is up here around 25.50 or so. So that's kind of where I would maybe expect, this to be heading over the medium term, maybe a couple weeks, months. But all in all, I mean, breaking new all-time highs and closing above them isn't bearish.
Especially, especially in this market that we've been in for the past year.
Yeah, and I mean, and if you want to get like real technical, you could technically kind of use this wick as the top of the resistance zone and capture a little more price action, but it doesn't really change anything. You're still breaking out here, and then
Right.
I would still use this measure move personally, and that's the thing. Fibs can be a little subjective, and so that is kind of tough. Where exactly do you measure this? Some people would probably even measure this move here and then use your 1.618 from this move. So I really think it just depends on how you draw your fibs. But I would take these extreme wicks and use those. So
Got it. Cool, Jake. We've got, well, we are pretty much out of time here. Let's do one last one, and then we'll close it down. That cool?
Yeah, let's do it.
All right. UUUU.
That
old energy fuels.
I mean, kind of the same thing. You're just kind of trading within a pretty defined range here, so there's not a lot of trend. If you throw the 50 and the 20 week moving average up here, if you were just simply looking at this, I mean, this is a pretty decent indicator. So look here. 20-week moving average moved up above the 50-week moving average back in 2018. That was the start of a massive rally. 20 weeks flattened out, broke below the 50, and that was the start of a huge move down. And then here, back in August of 2020, 20-week broke above the 50. And even though you did pull back a little bit, if you would have been using the 20 above the 50 as kind of the rule to keep you in, you would have actually stayed in here. That was the start of a massive move up. And now we're actually starting to move to the downside here. So, worth noting. And the thing is, if we went to a different stock that has the 20 and the 50 crossing like 50 times over the last 3 years, it wouldn't really be that big of a deal to me. I would just kind of ignore it. But this has very distinct crosses. 20 crosses up through the 50, 20 crosses back down through the 50, and the trend changes very drastically. So these are some pretty clean crosses, and not saying this can't continue up, because it can, just like back here when the 20 crossed the 50, we continued down for literally like 2 months. But it's worth noting, like maybe on the medium to longer term trend, that we may be, starting to break down. Lower highs still in play from, the April highs. Your secondary high here was in June. We're not even close to that yet, which was around 750, 775. So this definitely has some work to do, but a strong weekly candle at this point.
Very interesting indeed. Well, Jake, man, we really appreciate your time this evening. Thank you so much for coming and hanging out with us. Any last words for the viewers?
Yeah, thank you guys for joining in. Hopefully this was, not only just updates on the chart, but maybe a little educational. I really am more focused on people learning and kind of finding their own direction from, basic kind of teachings than just being reliant on somebody to give them all their information. You're not independent if you're just relying on someone else for information. So I like to post charts on my Twitter just for a different perspective. Hopefully it can be educational, but if you really want to get serious about the markets, you definitely need to find what works for you, what works for your personality. And then, if some of these ways of looking at the market are helpful, I'm glad to hear it.
Awesome, man. Well, thank you again so much. And thank you to everybody who tuned in tonight. We really appreciate you all being here. I will be live tomorrow right back here on YouTube, 10 till 12 a.m. Eastern time, 10 a.m. to 12 p.m. Eastern time. So if there's any charts that we happen to miss tonight, feel free to come hang out with me. I'll be happy to take a look at them for you. I hope you guys all have a great rest of your evening and great weekend and all that sort of stuff. And we will catch you guys all next time. All right. Have a good night, Jake. Have a good one, man.
See you, everyone.